this week. So let me just go back to Monday. So Monday is the 17th right now. We're on the 19th. All right. So for this trading week, we do have some important news coming up. I want to make sure that you guys are aware of all the economics that are going to be taking place for this trading week. I know myself personally, I always touch up on economics every single time it comes to the markets on Monday. And then throughout the week, I just make sure I stay updated. I don't specifically trade news, but I make sure that I know what's going on nonetheless, because the second you don't know what's going on and you're out of the loop, that's when all your money can potentially get lost, and then you see random spikes, you're seeing huge vectors push in certain directions, you're seeing price move to different zones. So you always want to make sure that you have news in check. So first we have AUD. For AUD, we have the monetary policy meeting covering AUD spending going forward through the second half of this month. It's going to be unpredictable, not something that we need to really worry about. So you guys want to make sure that, like I said, with all economics, even if it's not something you have to stress over in the moment or when you're trading, you still want to be updated nonetheless. So this happens 11 times per year, 2 weeks after the crash rate is announced. So that's what's happening with AUD. So as you can see, if we trade any AUD pairs, we can expect spikes, any volatile movement. You just want to make sure that you're in the loop nonetheless when it comes to any type of economics in the market. Next we have, if you go, let's see tomorrow. Tomorrow we don't really have much going on. And then next we have the OPEC JMMC meeting. So that's going to be covering a potential increase or cuts made regarding to oil pricing. Again, not something that we're going to really have to worry about unless you're trading oil. So if you're trading oil for this week, especially if you're in a live account, you want to make sure you're trading oil safely. And this is going to be something that's going to heavily impact oil trading specifically. So I don't personally trade oil. I don't stick to those pairs just because they're a little too volatile. And in my opinion, too volatile for me to trade and safely exit the week with a profit. When it comes to oil, oil moves very, very fast and lots of random spikes up and down. So meaning it can hit stop losses in both directions. So that's why I typically stay out of oil. For those of you that do trade oil, make sure this is something that you're taking into account. This is going to be on Wednesday. So right now it's Monday, so you have another 2 days to trade oil. Once Wednesday approaches, make sure you guys just have you're updated with what's going on, because this could be a crazy impact. This may also affect the U.S. economy, the AUD, Euro, the GBP. So this is why it's also important for us to just be aware of what's going on. Next, we have, let's check. Next, we have Euro news. So right now, I'm just going over red folder news. I'm not really going over any orange or yellow because I want to make sure that I'm catching the volatility in the pairs. I don't want to have to assess every single economic update that's going to happen, because then what I'm doing is I essentially won't know what's going to happen next, right? Because one set of news could tell me the market's going to go bullish, and the next set of news tells me that the market's going to go bearish on, for example, Euro. So that's why I'm only sticking to red folder. I only care about what's going to heavily impact the market. So next we have Euro. So we have lots of flash PMI news being released and expecting nice boost for the Euro pairs on Friday going into next week. So for the Euro pairs, we're expecting a boost transitioning into next week. So this could be good for the Euro economy, could be some good buy positions in the works. I am going to be analyzing Euro USD and Euro GBP, so we'll be getting into technicals with that as well to back up the analysis and back up the economics released for the Euro. Next we have GBP. So this is for Friday. The GBP, so we do got some orange, we'll just go over that. GBP, despite being an orange folder, I'm expecting a similar outcome to the Euro news. So again, there's expected to be a small boost with the GBP, especially the GBP against USD, the Canadian dollar, etc. So Euro and GBP, there's going to be a small boost in the economy, especially with the way they're moving. Everything's looking nice. And then last but not least, we have USD. So this is the USD PMI flash news. I'm expecting to be false because the currency is on suicide watch as of right now. So as of right now, there's a lot going on with the U.S. economy. The U.S. economy is basically pumping money into all these big companies and essentially printing new money when there's not really any spending or buying going on. So if there's no spending and there's no buying, the economy is essentially technically at a stalemate. It's not really going anywhere. But with the U.S. spending to print money, they're essentially they're essentially killing themselves off as an economy. So I want to make sure that with the U.S. news going on, I do believe it's expected to be bearish. U.S. economy is kind of, like I said, as of right now, is very, very weak, and we can use that in our favor, especially backed up by our technical analysis. I know, for example, USD CAD right now is slowly crashing. I was expecting my USD CAD order to hit level 3. So now I'm going to get into the technical analysis. I'm just going to kind of go over that with you guys. So like I said, I was expecting my USD CAD analysis to retest into level 3. But as you can see, with the way the economy's been moving, it's been on a very steady bearish movement. So we peaked at the price point 1.46. So that means the Canadian dollar to US dollar was $1.46. We peaked at that price point. And then from there, ever since March, we've been on a very steady downward movement. So if I actually jump to the daily time frame, and for those of you that are familiar with level trading, you can see we're actually kind of following a level structure downwards as well. So for example, this could be level 1, level 2, and then level 3. Level structure can basically be identified in all time zones. I mainly stick to the 4-hour and the daily. This is just to kind of give you a good idea of where the market's kind of headed right now. So once we're seeing level 3, chances are the market is expected to be way too overextended. So right now we're in the low zone of 1.32. So that's about 14 cents decrease of the US dollar to the Canadian dollar. And there's bound to be some correction in the market. So if I jump back to the 4-hour, so jump back down to the 4-hour, you can see I've been placing buy positions on this trade. For this trade, I'm pretty sure last week or 2 weeks ago, I scratched out, it was around $200 to $400 profit. Manually had to close the trade after this consolidation. But as of right now, like I said, it's retesting a low price of 1.32. So last time we were at this price was just before the new year. So you can see, or actually is this January, February? Yeah, so just after the new year 2020. So January, February, this was the last time we were in this price right here. And we're kind of retesting this zone again. So what I believe is going to happen next is that the price is going to retest, consolidate just like it did right over here, and kind of play on this price for a little longer. Like I said, USD is very, very weak at the moment, so I do believe it will potentially break even lower. One second, I'm just looking for my tool. Oh, there it is. So it's consolidating. And based off previous price action, I do believe it's going to break even lower than what it's currently at. So you can see it's kind of retesting this dotted line. And then I do believe, like I said, it's going to break. So the reason I believe it's going to break is obviously because the economics coming into play. So this is where economics gets very, very, very important. If you're unaware of what's going on around the world or how the dollar is rising or decreasing, then don't expect your technical analysis to save you all the time. So in this case, you can see market broke support once, twice, 3 times. So right now it's kind of, like I said, the US dollar is just failing and failing and failing, and it's showing signs of it failing. So as of right now, the best positions you can take, even though I do enjoy trading the level structure and that's the safest structure to trade, I'm not going to force myself to trade a structure that's ultimately not going to work, especially in a market that's thriving based off economics. So this is the type of trade that is being heavily influenced by economics, and retail traders are taking it, and professionals are taking advantage of these moves. So because the US dollar is so weak, everybody's selling the pair off. So every time it retests, it looks like this trend. Retail traders are entering the trade, going off, sell off positions, pushing the market lower and lower. So if there's traders entering the sell, pushing the market lower, and the US dollar is very weak, it's kind of a no-brainer at this point to keep selling off the US dollar to the Canadian dollar. So what I'd rather anticipate for this pair is for it to retest this support level, or retest this higher resistance, or retest the trend. Either way, these 3 positions are going to be strong signs that it's going to be a strong sell-off. Why? Because once it retests these zones, retail traders are going to be entering the pairs and forcing the market back down, right? Especially, like I said, with the economics into play. So I'm just going to go back to Monday. This is today, so let's find the US news. Especially, like I said, with the US news coming into play, you want to make sure that you're going to catch these trades when they appear. Me personally, I would rather catch the price point of 1.33 and then sell it off at this resistance level and then take it back down to right about here. The reason I want to do that is because I'm the type of person I like to swing trade, so I'm not going to swing trade once it retests this support level, for example, and only retest it and take it back down to this price point. Because as of right now, there's no signs it'll hit lower than this other than price action. The price action alone isn't enough for me to take the trade and feel 100% confident on it. So the price I'm looking to enter at is, let me just write it here. Sell limit at 333.80. And this may take some time for the market to retest, but like I said, I'd rather be safe than sorry. I never want to force myself into a position that's not going to be a high percentage ROI, especially for my trading account. And I want you guys to have that same mentality. If it's not going to pay you out in full, no point in taking a trade if it's gonna pay you out half-assed. So that's USD CAD. Next we have Euro GBP. So Euro GBP is a trade that we took last week. EUR GBP. Just gonna have a sip of my coffee. Alright. Okay, so Euro GBP. Euro GBP is up here. I've been milking for the last, I would say, 2 weeks to the last month. So as you can see, market basically came from level 1, retested inside our level 2, stop hunt high, stop hunt low. Market is playing off perfectly. Small trend in the works as well. Took the buy position from level 1 all the way to level 2, and again, the buy position from level 2 to level 3. So this is the purpose of the 1, 2, 3 level structure. It's there to help you understand the highs and the lows in the market. So as you can see, in this case, we're playing off the low position, which is why I'm taking the buy to level 2. And then again, if I know that the market is going to go from level 1 to level 2 to level 3 being the highest position it can go, and once it hits level 3, it's overextended, again, I'm taking the buy position from level 1 to level 2, buy from level 2 to level 3, and then boom, that's when we retest level 3. And then once we're inside level 3, I know market is way too high, it's way too overextended. How do I know this? Because you can see market is playing off the low, and then once we hit level 3, we're considered to be overextended. These are 1, 2, 3 pushes into a completely new price point. The market has to come back at some point to pick up all the orders that were left behind inside of these levels. So that's what happens. Market basically overextends into level 3. Once we retest level 3, then the market issues signs of a potential reversal. How do I know it shows signs of a potential reversal? Because first, we get the stop hunt high. So you can see market basically breaks past this resistance zone. Once it breaks past, that's how I know, okay, market is hitting past, hit the stops on the traders that are trying to enter at the highest position. And then once the market comes back again, I know, okay, market is failing to break past the resistance. The market may retest these red horizontal lines. Why? Because this is where the money is left behind as well. Market knows, okay, if I were to come back up here, I might be letting retail traders out of the trade, which is what I don't want to do. So he's looking to retest as many times as he can. He's not going to go up here. Why? Because right now there's money left behind. So if he goes up here, a lot of traders are going to be breaking even and then close the trade, and then that's how the market maker is not going to be able to scratch a profit on his side. So what he does is he wicks just under. You can see right here, wicks just under, and then from there, second leg M. Once you get that second leg M, we also have back-to-back railroads, long wick to the downside, and then boom, straightaway trade. Market just plays in the take profit zone, retest the support level. So if I were to actually measure this top to bottom, so top to bottom, 120 pip move, just based off the 1, 2, 3 level structure. And I could have taken this trade if I held it long enough down to level 2, down to level 1. As long as you're taking the trade back down to the bottom of level 3, 2, or 1. That's the goal of this trade. The goal of level 3 is to take it to the highest possible position that you can ride it. For me, in this case, it was just under this support level. And the reason I closed just under the support level is because consolidation told me. So once I saw the consolidation right here, it told me that the market is no longer going to break past. Why? Because again, same reason it didn't break past up here. There's money sitting down here that the market maker doesn't want to let out yet. So what is he going to do? He's going to consolidate. Once he consolidates, he's letting the traders either manually close in a loss because they believe, okay, fuck, the money's not going to come back. If the money's not going to come back, why am I going to hang out of this trade? So he consolidates, and then he basically pulls away, comes back, gives him another opportunity to close with less of a loss, and then pulls away, and then consolidates again, comes back, gives him another chance, and then once he realizes that they're not going to close, he takes off and consolidates away again, right? And then right now, this was last week's trade. Like I said, very basic support and resistance analysis for this trade. I knew that the market maker was going to keep pulling and coming back, pulling and coming back, so I figured, okay, why not enter the trade now, make money while he's pulling away? Because right now, like I said, he's trying to pull away from the traders that have money down here. So if he's trying to pull away from these traders, then I'm going to take the buy position all the way up. If you can see the switch up the song. Yeah, my bad, I'm switch up the song. It's on shuffle right now, that's why. One second, guys, I'm just switching up the track. I just put that one track on and it was just on repeat the whole time. Alright, there we go. So like I said, I wanted to enter the trade because I realized the market is going to keep consolidating and pulling away. Consolidate, pull away, consolidate, pull away. So I want to at least make money on his moves because I'm aware of what he's doing. And this is the beauty of trading the market maker method. Once you understand what's going on and why he's doing what he's doing, you could basically trade in line with him, right? So same thing over here. I knew he was retesting level 3. I knew he would have dropped from that position because he didn't want to let traders out of this trade. And then like I said, once we're in level 3, it's way too overextended. This is where all the money is to be made. And again, as of right now, I knew he's going to keep pulling back. So I figured, why not enter the trade right now off the consolidation just before it takes off, and then close halfway or close at the take profit, and just make money for last week's trading week. So that's kind of what I'm seeing for EURGBP. As of right now, I'm going to let the trade ride out because this trade is still playing out. I already closed this week for $500 Canadian. I'm just going to let it ride out until it hits either the take profit or until it breaks out back into level 2. Once it breaks out into level 2, then I'm going to be trading level structure again, looking at the sell position, and then taking the sell down to level 1. Typically, I like to reset my level structure, but this one is playing out perfectly that I don't want to change it as of yet. If it breaks the structure, so if it goes from, what a break structure looks like is if it goes from level 3, for example, and breaks higher. So if it breaks higher, then I'm going to completely erase this markup and find a new level structure in this zone. Because I already milked my end of the profit, I'm just going to wait for it to play out right now. So that's EURGBP. Next we have Euro USD. So Euro USD, I'm pretty sure, yeah, Euro USD is basically ready to drop from a 1, 2, 3 level structure as well. So level 3, again, is the highest profitable trade that we're going to find in this market. So as of right now, I just adjusted my resistance level. The reason I adjusted it is because I want to line it up with the full bodies. So I'm lining it up with the candles right over here. I'm not trying to line it up with these high candles over here. I want to keep the full bodies. So that's kind of what I'm doing. And then again, you can see it's retesting an active resistance zone right now. So all I'm waiting for Euro USD, because I do believe it is a level 3, this box is basically indicating a potential stop hunt high. So if the market were to retest the high position, I do believe it's going to retest these wicks right over here. So that's what I'm going to mark up right now. So just to measure them out as well. This is, it says bars. So this move is about a 30 to 40 pip move from bottom of this, or the top of this resistance to these high wicks right here. So if I were to place my stop loss for this trade would be behind these wicks. The reason they're going to be behind these wicks is because if the market maker comes up for a stop hunt high, I don't want to get stopped out of the trade knowing that he's going to retest this price point. Another thing you can do is retest once it hits these wicks. But the thing is with entering at the wicks is that, okay, let's say he retests the wicks perfectly and you enter right at the wicks. Now you don't know where the next stop hunt could be, because what if he hits higher, right? There's no previous price action telling us where he's going to hit next. So it's safer for me to enter at the resistance, let him do a stop hunt high. My stop's going to be just behind. And if it stops me out of the trade, it stops me out. I'm not going to re-enter. I'm just going to let it hit my stops. I'm going to accept that loss and walk away. Because if he hits my stop in this case, then that means, okay, he has another goal in mind, right? He's not just trying to hit the stops and take off. He could be playing in a whole new price zone up here. And I don't want to get caught in that. And then, you know, just like a retail trader, now I'm hanging $500, $1,000 in a loss. And I'm sitting there like, what the fuck did I just do wrong? What you did wrong was you enter a trade without understanding where the market could go. So if I enter at resistance, I know it could go here, and if it does break past, I want it to stop me at the trade. I want my stops to get hit, so that way I exit the trade, and then it plays out. If I enter here, now I don't know where the market could go next. At least down here, I know where it could potentially go next, right? So that's understanding the market, understanding the moves of the market, understanding the moves of the market maker. And that's why this is so important. So again, market level 1, level 2. I'm just gonna write it out for you guys. Level 1. And I know, I don't know if Jeremy's in here, but I know Jeremy. He's a student I'm working with one-on-one. He did this exact same markup, and I'm coming back to his chart. I'm seeing the exact same thing, and I think this is going to be a fucking huge payout if we catch the level 3 drop. So this is going to be a level 3 drop, and then this is going to be my sell position. So again, you guys can see trading the 1, 2, 3 level structure. You take the buy, ride it to level 2. Again, take the buy, ride it to level 3, and then from level 3. You catch the sell position on the drop, and then you ride it to the bottom of level 3, top of level 2, bottom of level 2, or top of level 1, bottom of level 1. For me, it ultimately depends on how fast this trade moves. So if the trade takes 2 weeks just to hit the bottom of level 3, I'll manually close, accept the profit that's made, and then walk away, find a new trade. And that's kind of what I want to instill in you guys as well. For those of you that are still here, I want you to have this mentality of taking money when it's given to you and understanding when to walk away, because that's the thing with a lot of traders. They don't already accept a loss when they enter a trade, so once they do lose, they're kind of pointing the finger and going, what the fuck is going on? When in reality, it's you have to accept the loss before it happens, and then when you make the money, just know when to walk away and come back another day. So anyways, getting back into the analysis, I'm going to jump to the 1 hour just to kind of see how the market's playing out. So as of right now, you can see my wicks line up perfectly, stop hunt high. So I'm just going to go to the 4 hour again, do a stop hunt high box, rectangle. So there's going to be one stop hunt high, and then another stop hunt high. Alright, stop hunt high 1, stop hunt high 2, and then boom. If we get a third retest, that's also another confirmation, because that's going to be a triple top on the high position, and this could be a potential second leg M top as well. So if I draw this out, this could be this first leg, comes back down, retest, and then boom, second leg drop. So as of right now, I'm just going to set an alert for this trade. I'm going to set it at the price 1.88. 188.10, 88.10. Only once. Open-ended. Show pop-up. Notify on the app. Got it. Level 3 retest. Okay, so basically I'm just setting an alert so that way if the market retests this price again, because you can see it did retest once, I want to make sure that I catch it. So I'm going to basically open up my trading view or my MetaTrader, check if there's any candlestick patterns forming. If there is a candlestick pattern forming, for example an indecision or a railroad, or this is a second leg M, so if it closes at an indecision, then I may enter the trade and take the sell position all the way down. And I already have my stop in place, so my stop, like I said, is going to be behind these wicks. I think I'm going to add an additional 20 pips, so this is a 40 pip stop from here, and then from here to here it's going to be an additional 20, so I might have a 60 pip stop loss and then 120 pip take profit. And that's going to be the reason that's going to be a good take profit and stop loss, because let me just measure this real quick. So if I enter the short position, so just this zone right here is going to be 120. So if I take it to the bottom, it's going to be about a 200 pip move. And the reason I can catch these pips is because I swing trade, you guys. I don't day trade, so I'm not going to be in and out the same day. I'm going to be holding this trade for at least the next week to 2 weeks. And that's just what works for me. You might be a little different. Whatever floats your boat, whatever makes you money at the end of the day is all that really matters. So that's Euro USD. Right now, the next pair that I have on this list, so Euro USD, I'm anticipating sell off at level 3. So just to summarize what we went over, USD CAD is approaching a level 3, 1, 2, 3 level structure down. I didn't identify that, but as of right now, it's following economics, so it's breaking lower and lower and lower, which is why I'm not entering the trade. But I am keeping an eye on it. And then Euro GBP, like I said, is a trade we assessed last week. $500 CAD closed on Euro GBP. Euro USD, we're in a level 3. We're going to be selling off at the top of level 3. Right now, we're just waiting for the candlestick confirmation. And then last but not least, we have USD CHF. So USD CHF, all right, this is kind of random. I'm just going to do a fresh markup. So as of right now, first things first, I'm going to go into the daily time frame, just assess price action, what's going on with this pair. So USD CHF, it trades the way I want to trade. What does that mean? There's a lot of volatility, there's a lot of pullback. So you can see the market's kind of going like this, spike, like this, spike, like this, spike. That's what I want whenever I'm inside of a trade. I always want to make sure that the market has a good amount of pullbacks, it has levels, it has zones, it has support and resistance, it has trends and everything like that. If the market is kind of just moving like this and steadily increasing, there's nothing I could really trade. I want something that looks more like, okay, boom, it's in a zone, drop, or rise, drop. Right? I want something like this, opposed to something like a trend. Right? The reason I want this is because this trades in line with my level structure, trends, support and resistance levels, and it's just easier for me to identify. And this is kind of trading like that. It kind of looks like a trend over here, but as of right now, I'm trading here. So this is what I'm anticipating. As of right now, USD CHF, like I said, I'm going to go to the daily time frame. So I'm in the 1 day. I'm just going to assess 2020. So I'm going to get my vertical line. December, January. Okay, so this is basically the beginning of the year. So this is kind of what's been going on with USD CHF since 2020. Typically, I don't like to assess anything further. So this is 2019. I'm just going to mark that up. So this is 2019, this is 2020, and then this is obviously 2018. So you see I'm kind of sectioning off the chart. What's kind of happening in this chart? So already I could see very strong price action right over here. So 2018, market basically retested again, similar move. You could see long spike or long move, and then boom, shoots out again. Long move, shoots out. Right. So history doesn't repeat itself, but it rhymes. As long as you're understanding what's going on, that's all that matters at the end of the day. So the last high position that we played in was 2019. The high position right over here. We peaked at the price point of 1.02, and then right now we're sitting at the price point 0.90. So that's about 12 cents difference for the US dollar to the Switzerland franc. That's a big difference, especially with this pair. And as of right now, it looks like we broke past the low position. So right now we're playing in a lower position than where it was previously at. So the lowest point was 0.92. Now we're playing at 0.90. So 2 cents change, which is basically a 2,000 pip move. 200 pip, not 2,000. 200 pip move from the previous low position. So as of right now, again, this is a US pair. USD CHF, following economics. USD is weak against the CHF. Currency will continue to move bearish until USD economy replenishes. Okay, so basically this is the US dollar versus Switzerland franc, right? So just like USD CAD, USD is breaking lower lows, and we need to be aware of what's happening with this economy. This is where news gets very important, because as of right now, it's not really following technical analysis. It's more so following the actual economy and kind of what's going on. So as you can see, US dollar is failing against the Switzerland franc, so it's following economics. USD is weak against the CHF. Currency will continue to move bearish until the US economy replenishes. So basically, this pair is going to continue a bearish trend until the USD starts to correct itself again. So as of right now, there's no signs that the USD is really going to be correcting itself, and it might kind of just be in this low point for a very long time. So as of right now, the strongest position you can take on this trade, it would be a sell position if you're going more long term. If you're going more, again, day trading, The trade you can take actively would be a buy on the support level and then ride it to resistance, but that's not enough confirmation for me personally to enter the trade and know I'm going to be making my money back. So what I would want to wait for is the sell-off on resistance, because again, following economics, the sell is safer than the buy in this case. So sell-off on resistance to support level. Sell to support level. So that's kind of what I'm predicting for USD CHF. USD CHF, this was a trade I previously used to make so much money off of, but as of right now, based off how the US dollar is moving, it's safer to just enter off these sell-offs and just keep it that way for a while. So this is USD CHF, sell-off on resistance, sell to support level. As of right now, I'm going to set an alert for when the price retests my resistance. So I'm going to set at the value of 0.91911. 911, 911. USD CHF resistance potential sell-off. So alerts, you guys, is something I've also been recently using. Thomas initially showed me how they work, and I feel like they're super effective, especially when it comes to keeping up with your markups. So basically what I use the alerts for is just to come back to the charts when the market retests a price point, and I want to know kind of what's happening and how I plan on assessing it. Instead of entering a buy limit and just taking the trade, you always want to make sure that the trade is valid to begin with. So that's why I like using the alerts over buy or sell limits, because I always want to make sure that I know what's going on before I manually enter the trade myself. If USD CHF had a status, it would say away. Yeah, literally, it would. USD CHF is kind of in its own little point right now. But that's basically everything for this week, you guys. So as of right now, we have, let me just write it out right here. So USD CHF alert set for 0.91911. Oops. So this is kind of what we're seeing for USD CHF. Alert set for 0.91911. And this is going to be a sell position. And then again, Euro USD, we're waiting for another sell-off. So we're going to be selling the Euro against the USD for Euro USD, and then we're going to be selling the US dollar to the Switzerland franc for USD CHF. That's basically everything for this week, you guys. Do you guys have any last-minute questions? If you do, throw them in the chat. If you have no questions, put an emoji in the chat. I want to see who's still here, who's still paying attention. So just throw up emojis if you don't have any questions. Okay, Jans is here, perfect. Watching while I'm at work, okay. I see you, Alex. Keeping up with the trades, that's perfect, that's what I want. Yep, Nolan. Devin, okay, thoughts on EuroCAD. Alright, I'm going to check it out right now. I'm going to check out EuroCAD. Devin just asked what's thoughts on EuroCAD. I actually haven't checked EuroCAD in a while. I don't know what this pair is looking like for me. Oh, ERU. Oops. EuroCAD. So EuroCAD, as of right now, I'm just going to erase my entire markup. EuroCAD, same thing. You know the drill. So we're going to go to the daily time frame. Open up the vertical tool. So boom, 2019, 2020, separate the years so you kind of know what's going on. So as of right now, it looks like EuroCAD is failing to retest the high position of 2018, I would say. So this was the last 3 years. So 2018, boom, high position made, high position retested, 1.61. Right now we're at 1.56. So that's a 5 cent different, 5 cent change from the Canadian dollar. And as of right now, EuroCAD actually looks like a good setup. And this looks like a potential retest to the high position. If I were you, what I would wait for is the retest to the high position again, because you want to think about it this way. If this was the highest position and it's already taking off, it could be slowly decreasing. You want to make sure you milk this trade as much as you can. So you want to catch the sell position if it were to come back up at this level. And this is just very, very basic analysis. If I actually go to the 4 hour, 4-hour looks like, so far it looks like a trending market. So if I take trend line info column to trend line. So this could be a trending market. So this is EuroCAD daily. I'll go to the 4-hour. So you can see it's on a very, very strong bullish movement right now. And let's just go a little further. So honestly, what this could be, to me, this is what this looks like. This could be the potential beginning of a 1, 2, 3 level structure. So this could potentially be your level 1. And the thing is with the level structure plays off the highs and lows. So as you can see, we're playing off the high. So this could be your level 1. And then this could form your level 2. And then boom, level 3, and this could be your low, and you take the buy position back up to level 2 or 1. So this could be the beginning. I'm actually going to write this down as well, because I want to make sure if I'm identifying a level structure, I'm up to date with it. So EuroCAD. Level 1 begins. EuroCAD level 1 begins. This one's here for EuroCAD, and then as you can see, the reason this also could be a level 1, this could be a stop hunt high. Stop hunt high, hit the traders that are in the trade that are trying to retest off the high position, sell off to the trend, and then market makers now playing off the retail trend. So let me just get my draw tool. Market makers playing off the support, follow support, begins the 1, 2, 3 level structure, retest the trend, follow retail trend until he retests resistance or the high position, and then boom, take the trade all the way back down to level 2. Alright, so that's kind of what I'm anticipating for this trade. Let me just put that back, stop on high. As of right now, I'm not going to be entering EuroCAD. So you guys can see I'm very, very disciplined and strict when it comes to entries. I make sure that I have everything in check before forcing in a position, and that's how I want you guys to be as well. I want to make sure that you guys are 100% confident in any trade you're in. This one I'm not 100% yet, which is why I'm not going to be entering the trade. So if I believe this is a 1, 2, 3 level structure, my safest trade is going to be, again, I'm going to set an alert. I'm going to set an alert for the price. EuroCAD. Oops. Level 1. Level 1 high sell into level 2. So this is my alert. Oh shit, I put the wrong price. Oops, there you go. You got set off. I didn't set the price. Alright, so level 1, 58, 109, EuroCAD. Sell off level 1 resistance into I don't know what I just opened up. Sell off level 1 resistance into level 2. Great. Okay, so now I have an alert set at the resistance level, so that way I can take the sell, ride it to the trend. If it fails to break if it breaks the trend, ride it directly into my level 2. So that's kind of the trade I have set right now. And then my stop hunt high for this trade would be, of course, this price point right here, the high wick. So this is where my stop would be. Genuinely, my stop may be either behind this resistance level or behind this one if it comes back and retests again. Because this is the high position, I want to make sure I'm catching this high. So I may have to re-enter again if my stops get hit. And that's kind of what I'm seeing for this trade. I'm just going to finish up this markup, horizontal line. And this would be my support right here. So you can see the trend is kind of following the support as well, which is why it has so many retests, because there's so many retail traders entering the trade. The market maker has to keep coming back to pick up those orders, and then he takes off. So what he might do right now is come back again, have retail traders enter the trade again, boom, retest the resistance, and then that's when I take the trade down to the bottom or the break into level 2. So that's basically it for EuroCAD. Let me just check the chat real quick. Only trade news if you have multiple source confirmations forecasting its direction. Yeah, so that's a good tip for news. You always want to have multiple confirmations. So for USD, for US pairs, for example, the news was telling me that the US dollar is weak, and because I know the US dollar is weak and my technicals aren't following the news, or my technicals aren't being followed, that's another confirmation that the news is going to be stronger in this case. So you always want to make sure that you understand your technical analysis and you don't try to force the trade. You don't want to force a technical analysis, especially when there's a lot of news backing up what's going on right now. So you don't want to be oblivious to one type of analysis just because, oh, you're confident, you're whatever, right? You don't want to get a big ego and fuck yourself up, lose money on your account just for a selfish act. Let me just read the chat real quick. Even then, don't trade news. Yeah, that's a good one too. Don't even trade news. Fuck news. If you don't know how to trade news. Thoughts on gold? Me personally wouldn't touch it right now. Oh, actually, yeah. Let me check gold. What is gold saying? I haven't checked gold in a while. Alright, you guys. So, when I was in Bali, gold absolutely fucking fed my account. But now, gold is kind of... It has a mind of its fucking own, dude. I have no idea what gold is doing. So, as of right now, gold peaked at the price. I haven't even checked this trade for this whole time, right? I haven't updated this chart at all because it's kind of gold right now. Another tip for gold, think of it like this. So the US dollar is decreasing in value. So this is the USD decreasing in value. So common sense, if you use your brain, and no offense to anybody that may not have seen this, US XAU gold will rise over the dollar even more if the USD is failing, right? So as of right now, again, like I've been saying for a very, 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 very long time, buy gold over the US dollar, because as of right now, inflation is not really a thing for the US dollar, because like we said earlier, USD is on suicide watch. It's going bearish. So gold will continue to rise over the US dollar. As of right now, do I believe it? I believe personally, I think gold will retest 3,000 by next year, or within the next 2 years for sure. Because as of right now, also real actual investors, you know, that hold stock, or you know, people like Warren Buffett, you know, those big top tier investors, they're buying gold. Robert Kiyosaki buying gold. All these money millionaires are buying actual shares of gold, real life gold, and holding it for as long as they can because of how weak the US dollar is. It's kind of a no-brainer trade at this point. Gold is kind of at this point where all you really need to do is set buy positions at the right time, and you're absolutely fucking milking gold 10 out of 10 times. So you can see this was the last crash that we had within the last, I would say, like 4 or 5 months. So June, oh sorry, not even 4, I'm being extra. The last 2 months. So gold has not crashed within the last 2 months. And then finally we got that crash. The reason it crashed is because the market had to correct itself, and now it's going again for another bear or bullish movement. So gold as of right now, like I said, I'm staying away from gold because it's too unpredictable at the moment. What you can do with gold, what I recommend for you guys, is to scalp gold. So if you see gold come back down to a low position, buy gold in and out quick. I don't really recommend swing trading gold. That's what I was doing previously. And just to kind of show you guys, I was trading the 1, 2, 3 level structure on gold. I had so many more orders compared to this one, but I was swing trading gold because that's kind of what was making me money. But now you can't swing trade gold because gold is so volatile. I really recommend just entering off these scalps, and I'm sure that's what a lot of you are doing, to be honest. Millions upon millions of opportunity. Markets are abundant. Gold's gonna hit 2100 before New Year's, but right now the bitch just eating out USD because of the Fed. 3000 retest as if it's hit before. Gonna hit 2100, crash. Yep, now retest. Okay. Yeah, so that's basically what I'm seeing for gold, you guys. I think that's gonna wrap up this week's webinar. I just want to say thank you to everybody that did show up. We had about 22 people in here, and this is just the start, you guys. So now I'm gonna be streaming on YouTube. Hopefully, you know, by next week and within the next couple weeks, I'll be able to stream my phone so you guys can actually see the trades that we're in as well. I might be streaming some video games. You know, once I enter trades, you know, hop on Apex, hop on Warzone, whatever the fuck I want to play, and just make money, play video games, and just kind of do that whole thing. But let me know what you guys think. Yeah, hopefully we can get some funny vlogs out, you know, some David Dobrik style shit. I'm not trying to do that Casey Neistat 20-minute vlog. That's a little too much. But it's all entertainment, you guys. You know, this is all for you. You know, hopefully you guys enjoy these. You guys, I appreciate everybody that does show up. This is just a start for FCI, especially. And yeah, that's basically everything, you guys. Again, I'll be sending an update for the VIP signals on the trades that we entered for this week. If you guys have any questions, if you guys are looking for any mentorship, make sure to message me specifically. If you guys haven't already, also subscribe to the YouTube channel. Like I said, I do plan on making more trading specific videos and little trading vlogs here and there with the gang, so make sure to subscribe to the channel. But that's basically everything, you guys. I'm going to end the stream here. Take it easy, everybody.